Hello my friends, it's Robert Miner with Dynamic Traders Group with a short video for our YouTube subscribers and Twitter followers. We're going to take a look at three markets that seem to be the most popular for those of you who check these videos out. That's the S&P, gold, and Bitcoin. We're going to update all three of those. Now, if you like what you learn in these videos, then keep in mind they're meant to be educational as well as prepare you for specific immediate trade strategies. So what you learn here, you can apply to any market in any time frame. Well, if you like what you learn and what you hear, I want to tell you about an offer we have just for the next month. And this is the first time this year we've offered a trial for our DT reports. So you can go to dynamictraders.com and check it out. It's a 1-month trial, just $19, so you can check out our report. You'll get all three updates each week, because we do 3 updates a week, and you'll have access to the big picture reports. I've just finished up on a 3-part series on the S&P. There's a couple major reports there on Bitcoin and gold and the dollar. Well, you'll have access to all of that as well. So if you're interested, again, go to dynamictraders.com and get the details. And it's only available through Monday, September 9th, this $19 trial offer. Okay, that said, let's get started, and we'll start with the S&P. Well, this is the SPX weekly data, and it's the weekly closes. And I'm just showing the data from the October 2023 low, because at this point, it's just that section up that I'm looking to see when it's in a position to complete that trend. Because when the trend is complete, then it should have a counter trend move for several weeks, maybe even a couple of months. So one thing before we get started, if you look at the past videos, you'll know that I anticipated the decline off of the July high would continue at least until mid-August, if not later. So it ended about 2 weeks earlier than I anticipated, and I'll show you the exact signal that indicated that decline, corrective decline, was complete in a minute. But here's what I want you to take away from the S&P. Is that on our September 20th, the week ending September 20th, which happens to be the same week as the next Fed announcement, and the 22nd is the fall equinox, which for whatever reason, it's one of the most frequent periods within a day or two of when there's reversals in the financial markets. But there's 3 key weekly time factors that week, and they all fall on the same week. So if the S&P is sideways to up into the week ending September 20th, and that's 3 weeks from now, that will be an almost ideal time period to complete this sequence up from the October low and have a reaction against that of several weeks, maybe even 2 or 3 months. But that'll be a key time period if the market is advancing into that time period. Not too far above the close last week, around 56.89 up to 57.83, basis weekly close of the S&P is a real important target area on the upside over the next 3 weeks, and that's not very far above the market. So I would be looking really closely at this area, basis a weekly closing data over the next 3 weeks, and if by chance the S&P had a weekly close around 56.89 up to 57.82 or 83, that broad area going into the week ending September 20th, you might want to be really alert for the potential of completing a weekly high. Our weekly momentums, we can see down here, are bullish. They indicate another 1 or 2 weeks at least sideways to up before a weekly momentum cycle high is complete. So everything seems to be in place to continue this bull trend for 2-3 weeks. This is the daily data, and it's just from this July high. And we can see the decline. We had an A, a B. Of course, at the time, we didn't know if that was an A or a B. Then we had this decline. So what we identified early on in our DT reports is that if the S&P were to close above the July 25th daily close, this is daily closing data, it would indicate that the bearish trend had not begun, but the S&P was in a position to have completed an ABC correction. We call that a closing overlap. And on August 13th, it did exactly that, indicating that this was in a position to complete a correction. Now, what happens following the completion of a correction? Well, the trend prior to the correction continues to a new extreme. Hasn't made that new extreme yet, but it's certainly continued, as we say, sideways to up right into this last Friday. So we've got actually a new high here on Friday. And more than likely, it's going to continue to above the July high over the next week or two. And we can see here as of Friday, the 30th, is that the momentum cycle, on the daily momentum cycle, made a bull reversal, and that's typically followed by 3 to 4 days or so of net bullish trend. So more than likely, technically, we can say the S&P is in a position where early next week, now Monday is a holiday in the U.S., the S&P is likely to continue net bullish and within the next week or two exceed the July high. And on a daily closing basis, if the S&P continues, keep 57.98. Keep that number in mind. That would be a target, a minimal target on the upside. So this is gold weekly data. It's also closing data as of the close on 8/30. That's just this last Friday. I'm recording this on Saturday. And gold is another one. If you look through the past videos, as I anticipated this correction would continue for several more weeks. Not necessarily be a bear trend by any means, but kind of be sideways at least for several more weeks. Well, this correction ended a lot sooner than I anticipated. That's why we have trade strategies. That's why we update these markets 3 times a week in our DT reports so that we can identify the technical signals that say, wait a minute, what we're originally anticipating is probably not going to happen. Here's what the market is telling us now. Well, what it's telling us now on gold is we should be within a couple of weeks, maybe 2 to 3 weeks at the most, of net bull before we can complete a weekly high. So this is I'm pointing down here to the weekly momentum cycle, and it's pretty smooth from overbought to oversold, and it's just not quite up to overbought area from where a weekly high is complete quite yet, indicates another week or two net bullish. So be aware of that. Be aware of gold continues a bull trend over the next couple of weeks, that it's in the final stages of the advance from the October 2023 low. And when this structure is complete, then gold should have a higher time frame correction than any since October 2023, and that would last several weeks, if not several months. The price area extreme price in the upside, probable at least, and it's not a projection it's going to reach, but this is probably about as far in the upside it'll get before that multi-week, if not multi-month top is complete, would be around 26.30 to 26.45 basis. This is the December contract weekly closes. So that's still a ways above the market. It's about $100 above the market. But again, that's the probable extreme, not a target that'll necessarily get reached. So the takeaway here for gold is probably within 2 to 3 weeks of completing a multi-week, potentially a multi-month high. And we're within about $100 of the maximum price that'll probably be reached before that high is complete. So let's take a quick look at Bitcoin. Bitcoin is one of the markets that has been unfolding almost exactly as anticipated over these past several weeks to actually since the March high. And that since the March high, we've anticipated that Bitcoin was making a correction, and when that correction is complete, then another impulsive trend substantially higher should follow. So I've done a couple Bitcoin big picture reports over the last few months to keep us up to date on the probable higher time frame cycles and trends. And again, it's pretty much falling into place. So I'll just give you the bottom line here, is that more than likely Bitcoin will complete this correction in the month of September. That's within the next 4 weeks. The most probable time period to complete it will be the week ending September 13th or the week ending September 20th. That would mean another week or so, probably sideways to down, before this correction is complete. Has the potential for going a good bit lower in the next couple of weeks. I'll show you that in a minute. But these are all various time factors, and then the weekly momentum we can see is just now reaching oversold. And at least for Bitcoin, our momentum cycle here has been really helpful, because typically Bitcoin does not make a weekly low until the momentum cycle gets oversold. In fact, not until it gets dual look back oversold. So the bottom line, the big takeaway here is probably sideways to down for another 2 or 3 weeks, but that is likely to complete what we can call this an A, B, C, D, E correction. Here's the daily data for Bitcoin coming off of the March high. Again, this is just very much a corrective type structure. That's what we've identified it as for the past several months. If you've followed up on Bitcoin in these YouTube videos, or if you've been a subscriber. But what's interesting here is just in the last week is that, not week, but the last couple of weeks, is Bitcoin has probably completed this little ABC correction. What does that mean? Well, if that's an ABC correction, which is given the initial signal that that's the case, if that's the case, then what follows a correction? Resumption of the trend, in this case bear trend, prior to the correction to a new extreme. That would indicate that Bitcoin more than likely over the next couple of weeks will continue to at least make a daily close below 53,770 and potentially a decline to around 47,000, 48,000, a bit below the low that was made in early August. So that would actually be the ideal setup if we were to see the Bitcoin decline to that level in the next 2 weeks. We have some daily targets. They don't begin until the 6th. Now that's next Friday, a week from now. And then a couple of the key ones are on the 16th and the 17th. Oh, that happens to coincide with the Fed meeting announcement on the 18th. So again, that's really the key week, is the September week ending September 20th. So we're going to be keeping a close eye on Bitcoin over the next couple of weeks to see if it makes a signal and a setup for high probability follow through and very low capital exposure to take advantage of this, potentially at least, this next significant bull trend that would continue to well above the March 2024 high, well above it. Well, that's it for today, my friends. Again, if you're interested in keeping up to date 3 times a week for these markets and all the other major markets, go to dynamictraders.com. Check out our 1-month trial for $19, available just through next Monday, September 9th. That's it for today. Take care. Robert Miner, over and out for now.